Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, December the 17th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. All right, having that out of the way, let's get this on. We've had some economic data come out this morning. Initial unemployment claims came in line with expectations, but Philly Fed Manufacturing Index came in at a negative 5.9 and is expected a positive 2.1. So that was a wet blanket on the overall market. We were trading up near the highs of the day when that market or when that data point came out, and the overall markets have really sold off. We're coming back now because markets have no memory. But at one point, the NASDAQ had given up all the gains that it had seen throughout the day. As you can tell here on the E-mini E-mini S&P chart, this is a 15-minute chart of the E-mini S&P, and when that data point came out on the Philly Fed, it just slumped down to the lows. Came down to this value area that I've talked about so many times in the past couple of days. This is the value area of the last several weeks, and we tested the value area high. After that number, we are getting into a groove right here at the value area. It's where the most time and volume has been spent over the past several couple of weeks. And this is a chart of the Dow Jones Industrial Average. At one point, it had almost given up all of yesterday's gains, also down 115 points. One thing that happened today, Pandora came out and had a settlement on the royalties that they are going to pay artists. Artists wanted 25 to 30 some odd cents, and they wanted to pay 11 cents. It looks like they found the middle road and are going to pay 17 cents per 100 plays in 2016. So that gave a boost to Pandora. That's finally out of the way. And I had on the January 11-12 put spread. Originally sold it for 43 cents, bought it back for 10 cents this morning. Could have gotten a little bit better, but I ended up chasing it. It was kind of like a free fall, it felt like, after the open on that one. There wasn't a whole lot of market in there, so we couldn't go middle of the road on that one. You had to give up a bit of an edge. In GoPro, I looked at GoPro. It's really fallen from graces. And it's kind of like when you drop a rubber ball. It bounces really high the first time, and then it kind of slowly starts bouncing. And it's kind of found this bottom. It looks like it's going to kind of start trending sideways. It might break the new lows, but for all intents and purposes, it's going to be a little bit gyrated and down here. We have really high implied volatility, so it was a good time to put on something like a strangle, because a strangle, I'm going to get a lot of theta decay in it because there's not very much time left in January, and it's right at that max slope for the most part where it really starts steepening, and should see a lot of theta decay coming out of that. If I get this volatility contraction as well, that should hopefully happen relatively quickly. So in GoPro, I did the January 15.25 strangle, sold it for 57 cents. So it's selling the 15 puts and the 25 calls to combine that strangle. So it's up here around where it found support last time. That should act as resistance, and then anywhere below where it's found support right down here. If I can get my cursor to move right around the 16 area, just 16, 17 area. So hopefully it'll stay right within those two strikes. In Lululemon, I did end up adding a little bit to this trade yesterday. I have on the January 55 call spread, and I added to it selling the 52.5 calls and buying the 55 calls for protection. So came up and tested that, and still inside of my 50s, as you can tell, but hopefully this is topping out a little bit, and we'll get a bit of a sell-off in there for that one. Still has pretty high implied volatility on that. So that's what I'm looking for in that trade. Oracle, I didn't do anything in this yesterday. There just wasn't enough premium, as you can tell yesterday, even before the close yesterday. The volatility really started coming off in that, and by the time it was the end of the day, I think it was at 60% IV percent, or at a 60 IV percent, I should say. And of course, it hasn't gotten the volatility crush. And right off the morning, when I first checked it, it was only down about $1.15. So it's really gone outside that now, but was still inside of that $3 or $4 move I was looking at yesterday for putting a strategy around that. I just couldn't get enough premium for those strikes that I was looking for, so I just decided against it altogether. Going forward, tomorrow we're going to be doing a webinar on the collars, and the collar is buying a put and selling a call to finance a strategy on puts versus limits, or sorry, stops versus limits. So a lot of times people would put in a stop or a limit order at the same time after buying a stock, hoping that if it goes up and hits their limit order, they'll get out, or if it goes below a certain level, the stop will get them out. Well, the NYSE has gotten rid of those stops because there's a lot of market risk that goes on when you have a stop in there. If something happens overnight and the market opens up, $10 below where your stop is, you're going to get executed at the market, and a lot of people have gotten really beaten up on something like that. And then when you see the market rally back, you'll have a tendency to chase it or something along those lines. Especially on something like GoPro, you could gotten stopped out and watched it rally, chase it up. The beauty in doing the options is if you buy the put, you wouldn't feel this as bad. You would feel the underlying lose money, but those puts will gain in value and offset a little bit of that downside risk. Now, with the adding the call to that, you can finance those puts, so you can put those puts on for relatively cheap, and sometimes we'll be able to get a credit for that overall strategy, which will lower the basis that we paid for that stock. So if we bought the stock for $50 and we buy a put and sell a call, maybe we can get a credit of about 10 cents and slightly lower that basis. So it takes a lot of risk off the table. So check that out. You can go to protraderstrategies.com, sign up for that. The more the merrier. I love having a lot of people there because it just makes it a lot more interesting. Get a lot of great questions out of you guys, and hopefully I can answer some of your questions. That's all I got for you today. If you can't take that, take it easy.